Hi everyone, welcome back to Corporate Decoder, the place where we make sense of the money moves that shape our world. And let me tell you, DWS Variable Series 2 has just dropped a report that's drier than a desert but packed with more hidden treasures than an ancient tomb. So this is the certified shareholder report for registered management investment companies. Think of it as a really thorough checkup on a bunch of different investment funds managed by DWS. We're talking about their performance and what they've been up to from January 1st to June 30th of 2025. It's a big document covering many different funds within this series. So we'll try to get through the highlights without getting too bogged down. This form is all about reporting what's going on with these investment companies. The main point is to tell shareholders how their money is being handled and what the investments look like on a specific date, in this case June 30th, 2025. Let's dive into what it costs to have your money managed. If you invested hypothetically $10,000, the cost for Class A shares were around 33.64% of your investment, which is considered annualized. The report mentions that without any waivers or reductions in fees, the costs would have been higher. Always good to know fees are being managed. Now, for some key numbers these funds are managing collectively, the total net assets are a massive 112,187,387. That's a lot of money. They hold about 337, called portfolio turnover is around 80%. This means they do a fair bit of trading to adjust their holdings. The total advisory fees paid out were 200,061. Let's break down where the money is actually invested. Roughly 62% is in fixed income, meaning bonds and similar debt investments. Within that, corporate bonds make up 25% and government and agency obligations are 11%. Then there's about 62% in equities, which are stocks. Common stocks represent 31%, and surprisingly, equity index futures account for another 29%. That's quite a big chunk in futures, hinting at a strategy to gain market exposure efficiently. Preferred stocks make up 2% and the rest is in cash equivalents and other assets and liabilities. Where are these investments located geographically? The majority, about 72%, is in the United States. However, there's a significant 51% in non-US investments, showing a global approach to investing. Now let's switch gears to another fund, the DWS High Income VIP. For a hypothetical $10,000 investment, the cost for Class A shares were about 37.3% annualized. The gross expense ratio from their prospectus is actually higher at 0. Expense ratio from their prospectus is actually higher at 0.91%. The key stats here show net assets of 42,819, 19.5 and 93 with 2,006 portfolio holdings. Their portfolio turnover is also quite high at 89%. This fund seems to be more active in managing its positions. This fund is heavily focused on corporate bonds, making up a massive 89% of its assets. That's a really concentrated bet on corporate debt. Exchange traded funds make up 4%, and then there are smaller exposures to loan participations, cash equivalents, and convertible bonds. Notably, common stocks are at 0%, meaning this fund is purely focused on the bond market. Looking at the sectors within those corporate bonds, communication services take up 17%, energy 16%, and materials 15%. Consumer discretionary is 12% and industrials are 9%. This is crucial for a high-income fund. The credit quality breakdown shows a significant portion in BB-rated bonds at 53%, which are considered speculative. B-rated bonds are 29%, also speculative, and CCC-rated bonds, which are very speculative with a high risk of default, make up 7% of the fund. Only 3% is in the highest AA rating. This clearly shows the fund's strategy is to chase higher yields by taking on more credit risk. Next up is DWS International Opportunities VIP. Class A shares cost about $44 for a $10,000 investment over 6 months, which is 0.83% annualized. Their gross expense ratio is even higher at 1.33%. They manage 21,433 in net assets, hold 86 portfolio positions, and have a very low portfolio turnover rate of just 6%. This suggests a more buy and hold strategy. This fund is almost entirely invested in common stocks at 98%, with a small amount in cash equivalents and other assets. Internationally focused, the top sectors here are financials at 23%, information technology at 19%, and industrials at 15%. Healthcare is 14%, and consumer discretionary is 10%. Geographically, Germany leads with 18%, followed by France at 12%, and the United States at 9%. Switzerland and the Netherlands also have significant allocations. When we look at their top holdings, we see major international companies like DBS Group Holdings from Singapore, Deutsche Börse AG and Allianz SE from Germany, and Brookfield Corp from Canada. This gives a good picture of their global equity focus. Now for something different, the DWS Alternative Asset Allocation VIP. Class A shares cost about $12 for a $10,000 investment over 6 months, a low 0.24% annualized cost. Their gross expense ratio is 0.88%. This fund is managing a substantial 405,000. One is extremely low at 1%, indicating a very stable long-term allocation strategy. This fund truly lives up to its alternative name. A large chunk, 44%, is in real assets, invested in specific infrastructure and commodity funds. Then there's 28% in alternative fixed income like floating rate funds and emerging market bonds. Alternative equity accounts for 15% and 9% is in absolute return strategies. Cash equivalents make up 4%. This is a really diversified approach, spreading investments across different types of assets that typically behave differently than traditional stocks and bonds. Moving on, we have DWS CROCI US VIP. Class A shares cost around $35 for a $10,000 investment over 6 months, or 0.70% annualized. Their gross expense ratio is 0.78%. They manage 130,460 in net assets and hold 74 portfolio positions with a turnover rate of 47%. This fund is almost entirely invested in common stocks at 99%, with a small slice of cash equivalents. Looking at the sectors, healthcare is the largest at 23%, followed by financials at 17%, and industrials at 13%. Information technology is 12%, and consumer staples at 10%. Their top holdings are quite familiar names in the US market like Johnson & Johnson, Cognizant Technology Solutions, Fox Corp and JPM Morgan Chase. This shows a focus on larger cap US companies. Let's look at the DWS Government Money Market VIP. For a $10,000 investment, the costs were $21 over 6 months, which is 0.41% annualized. Their gross expense ratio is 0.40%. They are managing a healthy 25,156,476 in net assets. A key stat here is the 7-day current yield, which is 3.96%. This is the income an investor would receive over 7 days annualized. It's important to remember yields fluctuate. This money market fund is invested in 63% repurchase agreements and 37% in government and agency obligations. These are very safe short-term investments, typical for a money market fund aiming to preserve capital. Finally, we have the DWS Small Mid Cap Growth VIP. Cost for Class A shares were about $43 on a $10,000 investment over 8.7% annualized. Their gross expense ratio is 0.82%. They manage 46,000 assets, hold 111 positions, and have a very low turnover of 5%. Similar to the International Opportunities Fund, this one is heavily invested in common stocks at 98%. The sector breakdown shows a strong focus on industrials and information technology, both at 22%, followed by healthcare at 20%. Financials and consumer discretionary are also significant. Their top holdings include companies like Advanced Energy Industries, Tyler Technologies, and Casey's General Stores. These are growth-oriented companies which aligns with the fund's growth strategy. Now, looking at these reports overall, DWS Variable Series 2 manages a significant amount of money across these funds. What stands out is the variety in their strategies, from the highly concentrated high-risk credit approach of the high-income VIP to the diversified alternative assets in the Alternative Asset Allocation VIP. The Government Money Market VIP offers a look at a very conservative capital preservation strategy. Their international and small mid-cap funds show a clear focus on specific market segments. A notable risk across many of these reports, especially the bond-heavy ones, is the exposure to interest rate changes and credit quality. Funds heavily weighted towards lower-rated bonds like the high-income VIP carry higher risk, but also the potential for higher returns. The performance in these funds will heavily depend on how well DWS manages these risks and capitalizes on market opportunities. The very low turnover and affiliate fee carry higher risk, but also the potential for higher returns. The performance in these funds will heavily depend on how well DWS manages these risks and capitalizes on market opportunities. The very low turnover in SOL is a consistent theme that DWS is trying to manage expenses through waivers, which is a good sign for investors, but it's always important to check whether those waivers are temporary or permanent. The consistent theme of investing in affiliated DWS funds also means that the performance and fees of those underlying funds directly impact the overall results, so it's worth researching those as well if you're considering an. Overall, DWS is operating a diverse set of funds, each with its own risk and return profile. The disclosure on advisory agreements shows they're going through the required checks on their management. It's a complex landscape, but understanding these filings is key to knowing where your money is going. Alright, that's our breakdown of these DWS filings. What's your take on these numbers and what they signal for these funds' future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description below. Thanks for watching. See you next time.